Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about USDCAD. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structure zone. In fact, what we can see is that from here, all these previous rejections to the downside were created. So every time the market tested its zone, it got rejected to the downside quite aggressively. At the moment, the market has broken back above this zone, so all this previous resistance is now turned support here. And as the market has created also a clear impulse and correction breaking out above this level, we can also measure the correction by taking our Fibonacci from the low to the high of the impulse leg, and this will show us that this very strong historical structured zone is also in between the 0.618 and 0.786 of the Fibonacci taken on the impulse leg, meaning that all this area is actually a confluence of support zone. And inside of a confluence of support zone, there is an increased probability of seeing a potential rejection to the upside away from the level, because there is an increased probability of seeing institutional longing inside of this area. Dropping down on the weekly time frame, what we can see is that the market definitely seems overextended to the downside inside of this demand and support zone. We had a clear impulse correction, the market then created a new impulse, and we still haven't seen any kind of correction. So we had a huge push to the downside with no meaningful correction. And also here, after this massive impulse, if we want to measure the correction, we have to take our Fibonacci on the impulse leg, which gives us a first upside target here at this 0.32 for a healthy correction after this such strong push to the downside. A correction which would also come away from a strong monthly demand and support level. So let's keep all of this in mind and drop down on the daily time frame. From a daily perspective, this is where things get quite interesting. We can notice an overextended M pattern, and what we know is that after an overextended M pattern, there is an increased probability of seeing a reversal, which is basically the inverted thing of having an overextended W formation. In the case of an overextended W formation, you expect a correction to the downside. In the case of an overextended M pattern, you expect a correction to the upside. We can see, for example, already an example here of an overextended W formation. After that, the market corrected lower. It's not every time, but in my experience, there is usually an increased probability of seeing a reversal. In this case, we have a clear impulse creating that overextended M pattern, and now the market is starting to exhibit this behavior of a market which is essentially exhausted of the downtrend. So we had a very strong push to the downside with big momentum candles, and then every time the market is dropping lower, new buyers are stepping in. This could easily mean that we're starting to see institutional buying inside of this level, which could further increase the probabilities of a potential reversal to the upside away from that zone. Now, speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players are doing on the CAD, what we can see is that with the last report, we reached minus 83.8k net positions. So what we can see is that net positions is already basically months that they have been increasing. We went from actually the low minus 183k all the way up to minus 83k. So we had a 100k increase in net positions, showing how institutions have essentially moved back to the bullish side for the CAD. So as institutions are moving to the bullish side of the CAD, there is no surprise that USDCAD has been trending lower, because if institutions are buying the CAD, they are essentially shorting USDCAD. So this push to the downside is no surprise. However, this is an extreme. Minus 83K is an extreme. We have only seen this around this level here. And basically what we had after that was a shift back to the other side of the market, because these things tend to be cyclical. As the market moves and creates those swings, institutional positioning changes along the way. Usually, this kind of reading coincides with an extreme. So I would definitely not be surprised with the new report that we will see some decrease again in net positions and institutions again moving back to the bullish side for USDCAD. So if that will be the case, if with the new report institutions will show that they're actually buying inside of this zone, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential reversal to the upside away from this level. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.